Forex Focus brought to you by IG, digging into how Forex markets are correlated to a number of assets, but especially gold and crude oil. A lot of people like to measure, how Australian dollar is correlated to gold, or Canadian dollar is correlated to crude oil, how euro, yen, and pound are correlated to either of these commodities, to try to build a little bit of a strategy of, okay, well, if the correlation is strong between this market, and one of them is moving higher and the other one's kind of lagging behind, is there potential for that laggard to meet up with it, or that other market that's been leading to come back down, given that correlations can they historically measure how often two prices move in the same direction. And we're going to calculate some of these correlations, and we're also going to throw in some stock correlations and bond correlations for good measure. But let's get through it, because we got a lot of data. We're going to be dealing with the same graphic, but just honing in on different parts of it. The first piece that I have the box around here are currencies to currencies. And so what we're doing, for the sake of making this as simple as possible, are looking at 6 major currencies: Aussie, Euro, Pound, CAD, Swiss franc, and yen against the US dollar. And so when you compare the currencies to each other here, you're kind of taking the US dollar piece out of it. And what we saw in Forex correlations to Forex is no surprise, really. Euro, Pound, and Swiss franc, very highly correlated, geographically, economically, very interwoven. Australian dollar and Canadian dollar, if you haven't looked at correlations among currencies before, that might jump out at you, the fact that the Australian dollar and Canadian dollar have a 0.7 positive correlation to each other on different parts of the world, both commodity currencies. And that's going to, as you'll see here in a second, really kind of connect a couple of things, is that Aussie and CAD can both have the historical tendency to be highly correlated to gold and both the metals market, gold and silver, and the energy market in crude oil. And so they can have a lot of correlation to each other. A lot of people will trade the Canadian dollar against the Australian dollar as its own pair there, given their high correlation. But also, you have quite high correlations. Euro to Swiss franc is 0.82, pound to Swiss franc is 0.74 in there, and then euro pound 0.75, some high correlations on that side of things. Now, bringing in the crude oil and gold piece, we see, and this is interesting, in recent history, there actually isn't that strong of a correlation between Australian dollar and gold. It's just positive 0.4 here, whereas it's positive 0.55 for pound to gold and positive 0.5 for Swiss franc. And so right now, pound and franc being more highly correlated to gold than Aussie. Historically, Aussie can be highly correlated to gold, but the standout oftentimes will be Canadian dollar. It's the most correlated of these currencies we're looking at to crude oil. Makes sense. Canada, a large part of their GDP and economy is dependent on crude oil production and refining. And so you see that relatively low correlation, 0.1 correlation between euro and crude, 0.05 correlation, as low as really you can get between yen and crude oil, but 0.34 between Canadian dollar and crude. And that's that commodity currency piece. Canadian dollar closer to crude oil a little bit there. Historically, Australian dollar closer to gold, but right now, pound and Swiss franc very highly correlated, above 0.5 to gold. But you see the bulk of those, the Forex markets here against US dollar are positively correlated to that gold market. A couple of last pieces here just to throw in. Thought it was interesting looking at the bond market here. Across the board, seeing green correlations between these different Forex pairs to bond prices. Now, keep that in mind. You might say to yourself, why would US bonds be positively correlated with the euro and the Swiss franc? Well, keep in mind that The inverse of bonds are interest rates. And so US rates are negatively correlated with these Forex pairs, positively correlated with US dollar. A couple of inverses, it's a lot to sort out, but just essentially the positive correlations you get between, for instance, the euro and Swiss franc and those US bonds, negative correlations with US rates. And that makes sense, right? We've seen as US rates moved higher in 2022 and this year in different periods, US dollar has moved higher as well, and vice versa to the downside there. But yeah, interesting to see Swiss franc, euro, the strongest ties to those US bond prices, which kind of makes sense, right? If US bonds are moving higher and US rates are moving lower, then people are looking for that euro and that Swiss franc that have essentially could be gaining, all else equal, for US rates moving lower, pushing more demand away from US dollars and into euro and Swiss franc. Last piece on stocks. In the S&P 500, correlations to these Forex pairs here, actually the only negative correlation on the board here, yen negatively correlated to the stock market. If stocks go down, yen historically goes up a little bit, and vice versa. Australian dollar pretty strongly correlated to the S&P 500 at positive 0.47. CAD, the other commodity currency, also positively correlated to stocks. Makes sense. You know, crude oil and stocks have a historically high correlation there. So the commodity currencies also positive correlation to the stock market. Just as a last piece here, wanted to solidify that Aussie piece that might stand out a little bit. Looking at the Australian dollar historical correlations to Chinese stocks, even stronger, close to 0.7 there, as Aussie has strong ties to the Chinese economy and the Chinese stock market, high positive correlations. And just want to show you the US dollar correlation to the S&P 500, US stock market there. Not a normal thing. Usually Forex market's very uncorrelated to the stock market, but Aussie right now is, trading with Chinese stocks and even to an extent US stocks. So there you have it, a bunch of correlations around commodities and Forex, bonds and Forex, Forex and Forex, and then stocks and Forex as well.